Running a couple minutes behind schedule here. I started building a position and then I got called away from my desk, and here I am just coming back. So I built a position on the way down. I have 4 boxes. We are opportunists, and so the news came out right here, rocketed everything up to 864 as we had expected. If the number came in line or weak, which it was. And so since the news came out, we had a pullback. I participated in the pullback. My stop losses are right below box number 4. And here I am trying to make my money back, right? So the position's already built. We're going to be spending our time talking. There's not much here unless we recycle some of the trades. Right, so I'll be recycling trades, and the market has retraced 3.5 boxes, right? And that red line is that level we were looking to short yesterday. All right, so that was the ultimate goal. And those of you that traded last night, all right, so this was yesterday. The target was this red line. The plan was to sell the red line, so you could have sold the red line multiple times before the news event, and then when the news came out, you had one last chance to get out, and then that was it. All right, so since the news has come out, I've built a long position back to support, and now I'm waiting to get paid. All right, so I built it on the way down. Now, preferably, if all goes well, this will be a bottom and we start to go up from here. All right, so I'll be able to start recycling the boxes and the trades within the boxes. Okay, so if we go and take a look at the daily candle, which we would normally do at this point, we have a higher high, we have a higher low, we've broken support, we are holding support, and we're now on our way up as a result of this morning's news. All right, so if we look intraday, this morning's news created a break. The break was just retested just now, and then in the last 5 minutes, we're pushing off from the breakout. And that's when I'll start to make my money back. Okay, so if we start to recycle some trades here, I'll be able to take them back. We want to play bullish from here, right? The euro is on its way up. Right? It's pretty clear. If we go take a look at the dollar index, we'll see why. Right? The dollar index broke its support, and now we're heading to a measured move, right? 103.50 or so. This is crooked. This is also crooked. And then if we look at the yields, similar story here, right? The yields have fallen to support. There might be a little bit of a bounce here, so that's kind of what we're experiencing. Right? But nonetheless, we have a strategy, we have a plan, right? Since we've broken the red line as a result of the news, we now have to remain bullish and continue to go long, right? So we were short just for an 8-hour session, right? Shorting was only here and here. We've been long ever since, and we will continue to be long. Right, this has to be 8 o'clock. Right there. If you have the money to, now's the good time to take a trade. Sorry guys, those of you that were put into the waiting room, it's because I was running late. There we are. Everybody should be able to see my screen, hear my voice. everybody is in the room. All right, so I'm just going to bring up the calendar real quick and refresh. All right, so we've basically survived this, and now we're waiting for oil news, which really does not impact our euro, but it does sometimes impact the US. Right, so we do have to keep an eye open, or be on the lookout. And so to review with those that came in late, right, our daily chart is clearly making higher highs and higher lows. Right? We have a trend unfolding here. We don't want to fight this, right? So as a result of this momentum and the news event that kind of created it, we have a pullback. The pullback is back to support, and in the last 8 minutes, 7 minutes or so, we have been testing support, and we're expecting to continue from here. All right, so if we go to a 5-minute chart and look inside of this, right, you can start building that ladder that we have every day. We have our floor, we have our ceiling, and this is that line that we were looking to break out yesterday. We broke it. Now we're above it. We are holding above it, and it looks like we're holding support. All right, so let's keep building the ladder before we go on to the next step. All right, for those that came in late, you'll see I have a whole pile of trades here already. It's because I traded after the news, but before the live session. And so I participated in this pullback here. All right, so I built a position just to exploit the pullback. We are opportunists, and I know I am. And so I took the opportunity. And now it looks like we're trying to go up the ladder. So I'm just going to squeeze that over here. Open this up. Okay, so I built a long position on this drop right here. This drop was 3.5 boxes, and so here I am now with the ability to recycle some of these trades. And so I'm going to wait on the red candle so that I can put the trades back in. At the same time, I'm trading long on gold off of the daily pivot, and in this other account over here, this trader is with Edge. I'm running that $25,000 challenge from a couple of weeks ago. The one we did the recording with. Let's refresh the squawk box. All right. So we're up one box. We have a red candle. If we see a little bit more red here, I'll reopen some of the trades that I can. I wish I could close these first. I don't want to recycle these trades unless we go back into that bottom box. There we go. That's what we're looking for. All right, so if I can close these and recycle them in this box, that would be perfect. And the euro's on its way. You know, if you look at the bigger picture, 1.1, 1.2, you know, depending on how deep the dollar index falls, we might see our euro find its way up, you know, another range or so. That would not be uncommon. It's only 100 pips away. All right. Whatever the euro decides to do, we will follow along with our little boxes. I will, anyways. All right. Come on. With 1 pip away. I will get rid of this. It's no longer necessary. I'll remove this. And I'm just going to focus my attention here. I already have 4 clicks in this box, so I'm hoping to close them in order to recycle them, right? If you have no clicks, now's a good place to put one. We like to buy stuff when it's on sale. Come on, come on, come on. The US number that came out this morning was not that far off the mark. It was actually in line with expectations. And so, as long as it's not terribly, terribly off, the market reacted appropriately. Right. If you're building a position, now's a good place. I waited for the news to finish. Then the first box up at the top here, the first box, I did nothing within. I posted in the chat room to not buy the first box, wait for the second box. And then at the bottom of the second box, I started to play and I was ready for a third and a fourth, which came much later. All right, so this is the idea. We play one box at a time, understanding that there might be 3 more if it fails. And so box number 1 is where you first start putting your money. All right, so if you delay box number 1 and it ends up being, physical box number 2, you probably bought yourself 9 pips of space. Right? That's kind of the key. We trade with space, right? We have an environment that we're willing to exploit. It's an envelope of risk, and we work within it. Everybody else is afraid of their stop loss, right? We're willing to exploit the space between here and the stop loss in order to maybe mitigate the loss. Hedging is something you want to do as, it's part of your plan, but it's the
Biden
last.
says I received and accepted CNN's invitation for June 27th debate.
Hedging is part of a plan, but it's the last step of the plan. It's not where you want to go. Right? So you kind of try all the alternatives before you force yourself into executing that step of the plan. If hedging is not planned, you tend to do it, as a, oh my God, last resort or a knee-jerk reaction. That will probably blow up in your face. And so this is why we practice hedging, like we go to the gym, right? Just to put in the reps. There's an exercise to do, just for that. It trains your brain to book the losses. Right? Once you're hedged, you're not committing to losing in both directions. You have to learn how to lose in one direction first. All right, so ever so slightly here, inside bar, bullish bias. We have to see if we break the low. If we break the low, maybe we're going down 50% of that move, maybe a little bit more. We have to be willing to participate. And we do that through the boxes. Right? So understanding what we're capable of, how much money we have to do it with, and how far can that take you. Right? So we look at the time, and it's the time of day that guides my next move. No, I have an idea of what the market has in store next because I've watched it the same window over and over and over. And so I'm expecting certain behaviors. And if I don't see that, or if I see something entirely different, I bail, right? We don't stick around. We do something like an insurance policy, right? We mitigate the problem. Let's just see what comes next, right? We want to keep going up through the boxes. We just don't know how they line up. I just stack them up for, entertainment, right? This just gives me an idea of where we can go, right? They may stack up very, very differently. They may not stack up at all, right? Don't be watching this recording this afternoon thinking you can trade this live. Right? I've seen this in a comment. That kind of made me giggle. Don't blame the strategy if this doesn't work for you. Blame the operator. You need to understand what's happening behind the scenes here. We're managing risks in a very different fashion, right? We do have a stop loss, but it's not to close the trade, right? It has a very different purpose in mind, or built in. We close the bad trades. Right, so if you've opened a couple of trades here on your red candles, you're already in the money. And we'll be closing in profit in just a couple seconds. All right, we're looking for a higher high on the day. Even though we have fulfilled the average daily range, right? So our average daily range is 55, and I'm pretty sure
10:30 a.m. Eastern time, we get our weekly EIA data, crude oil inventories, forecast to draw of 0.6 million.
Yeah, we don't need that. So I'm pretty sure we're at 65 by now. Oh, we're at 60. And so we've barely broken past the average daily range, right? We have room to roam a little bit more, right? Understanding that if we do go higher, we probably want to participate on the short side temporarily, just like we did overnight. Right? We're thinking this is not going straight to the moon, right? It will find resistance somewhere and find an excuse to go sideways for a little while before it continues on its merry way. Right? So anywhere in this area here, it'd be wise to sell. Right? So I'm only long to retest the high. And then I'm hoping to become a seller temporarily. Right? We are going to 1.1, 1.2, so on. Sorry, 1.1, 1.12. So 111 and 112. All right, so recycling a little bit more, I will be. You are probably closing winners. Come on, come on, come on. There are no trades in box one. Those of you asking in the chat room, why is there trades in box one? The trades that you think are in box one came in box two from the bottom up here. There were no trades taken in box one from the top, which is what the message was in the chat room. Right? Don't put trades here. The trades that you see came over there much later. Second guessing. Oh, come on, come on. I was hoping the oil numbers would create a little bit of US volatility. Just to push us up one box, that would be awesome. Come on. All right, following along, you're probably closing a couple of winners here. If you bought those red candles in that box, you're in profit. All right, red candle. I'm gonna recycle this right here. I'll put two there. What's the squawk box saying? 2 minutes before the oil news. What? There we are. Beautiful. All right, so if we get a red candle, you're buying more. Or recycling. Come on. There we go. Red. Didn't last very long. There. One. If it goes a little bit deeper. Oh, I was going to say, if it goes a little bit deeper, I'll open it again or reopen more. Come on. It'd be nice to see it come back to the bottom of the box here. And
1 minute remaining. I'll lead with the EIA crude oil inventories.
and recycle all 4 clicks on the way down. That'd be awesome. But if we go up, we can buy something like this once, twice, 3 times. So I put back the 3 that closed, and I'm saving 1 just in case it does drop a little bit more. The target is in the other box, but the entry is in the right box. There's the 4th.
10 seconds.
Let's see if we go up from here. Why is it so loud?
Draw 2.508 million. Draw 2.508 million. Lower than the expected draw of 0.6 million.
So
Gasoline
loud.
inventories. Draw 0.235 million. Draw 0.235 million. Lower than the expected build of 1
There
million.
we go.
Distillate inventories. Draw 0.045 million. Draw 0.045 million. Lower than the expected build of 0.7 million. Crude Cushing inventories. Draw 0.341 million. Draw 0.341 million.
All right, so if this goes a little deeper, you might be able to take more trades. I've already spent my 4 clicks, so I'm going to be a little bit patient.
We have posted the weekly EIA report on the feed for all those interested.
They're rebuilding their recreation center that's just down the street from where I live. And so for the last 3 or 4 days, there's been all sorts of construction equipment driving by. Last week or the week before last, they cut the power off in the afternoon to do stuff. Like they cut the city block. It's like, oh my goodness, it's so much interference for construction project. We live in the mountains. It's supposed to be quiet and peaceful here. I thought I'd left Toronto. Come on. I'm just waiting to see where the break will come in. And then we'll have the ability to recycle. I have a couple here that are hiding behind. I have a couple here and some along the
Brent
way.
oil futures pair losses down 0.5%.
Trying to see. This was 33. And how much have we done so far? 18. All right, we're going up the ladder on our 5-minute chart. Slowly but surely. It's reassuring. And then ultimately, we're hoping to test somewhere around here. All right, so by the time we get bankers close, or maybe a little bit before, we're hoping to test 880 or so. And we'll see if we get there. So we've just closed one in the current box. I'll recycle that one. No losses so far. If you're following along, you're in the money as well, or should be. Gold is off about $17 off its lows. Awesome. Euro's breaking up. Awesome. Everything's working. Awesome. When a plan just works. All right. So that trade that closed was in this box. So I want to put it back in this box. I don't want to put it in the upper box. It doesn't belong there. So I have to wait, see if we get a red candle, maybe in this area here. I'll recycle that trade. Right? I don't want to put Peter's money into Paul's box. I don't want to borrow from Peter to pay Paul, and vice versa. Right? We're trying to keep things segregated. The recycling adds, right? Building the position is how we make our money, and recycling just compounds the effort. There's a bunch of targets here hiding behind open trades. All right. If you're trading along, you're waiting for a red candle to take an entry. Right? We want to buy when stuff's cheap, when it's going up. Right? So the trend is bullish and we want to buy red candles, right? We want to buy stuff on sale. We've just closed a whole bunch more winners. And if I can close up here, I'll recycle those trades. If you make a higher high, you want to start selling, right? It's not going to the moon, not today, right? It's going to fulfill the average, maybe do a little bit more than the average, and then you start to sell that stuff. And you're not selling it to the South Pole. You're selling it for an average wick, which is about 2 boxes. Right? These are all normal events over and over and over and over and over. Right? The dimensions never change. We just don't know if we're going to be adding boxes to the bottom or adding boxes to the top. And we know it's already done so much work and it's not going to the moon on this 8-hour shift, right? So it's up to me to figure out what's average and then expect it to end near there. And that's when we become a seller, right? And it's not because we're looking for a swing. You know, we're selling for 3 pips. Just like we're buying for 3 pips. Red candle, back in the inside box here, buy. 2. If it goes deeper, put 3 on. And then if it goes deeper, put 4. Doing this with futures is almost impossible. Like at this rate here. Because in the futures world, everything is so much quicker. You know, we fly through the boxes, and by the time you realize what just happened, you're down $1,000. Right? So this right here might wind its way down. And for as far as we know, it can continue all the way down here. Just the same as it could do this or not go down at all and just continue to go up. Our role is to play the highest probability and as a risk manager, deal with 1 or 2 trades that don't work out. Right? This is a very high probability of success, right? We've lowered the bar as low as the bar can go. If it's not giving you 3 pips, you don't have to wait 12 hours like me, right? Get out. If you're not comfortable, get out. These are supposed to be high probability trades. It's bouncing to your target. It's not a swing trade. You're not relying on acts of gods to survive. And you don't have to have more than one god. You know, you are the outcome of what happens to you. Come on, right? It's a two-step process, and we have to keep the two steps separate, right? We open trades and we close trades. The closing of the trades, 98% of the time, happens by itself. Once in a while, you have to get involved. And so for most newer traders, the emphasis is spent on opening of the trades, and at some point, you're good enough. Start focusing on closing the trades, right? The market is in between the two steps. You can't control that part. All right, so here we are recycling one. We're like one pipette away from closing that second one that I took. All right, so now if we close this right here, these ones, we can recycle these trades in this box. All right, those of you following along, you've had a whole bunch of winners already so far in 45 minutes or so. Awesome, awesome, awesome. Red candle. If you're into this kind of stuff, take a buy. The waiting is what drives people mad. And eventually you'll give up on a good plan just before it goes your way. Right? So we learn to, uh, remain steadfast. Just believe in your ability, believe in your skills, believe in, your probability assessment, and then trust that when you're proven wrong, you're wrong, and don't debate it. It's this idea that we have three boxes to fix box number one, right? So box number one is supposed to make us money, and then you add with box number two, three, and four only when box number one is not bouncing in your favor, right? So this is the assignment, right? Make box number one work and try not to use boxes two, three, and four. Right? That's the first assignment. That's job number one, right? Try to just make money without using drawdown. Once you've got that little piece figured out, how to make 3 pips, then give yourself space to do it. All right, and then with space, this is the space that I used. The space that I use is now making me my money back. Right? I delayed gratification, I postponed gratification, and I did it to the same expense that I always do, right? 4 boxes worth. In this case, it was 3.5. And it's the same thing each and every day. It's situational, and it also depends on what creates the environment, right? What's the news? Was it good? Was it bad? Was it terrible? Was it a miracle? There's no 2 days the same. No two sets of conditions are identical, but we only have one filter, right? And so we're using the filter to figure out reality, from a delusion. We have to create these delusions, right? We have to create a bunch of what if scenarios, and one of them hopefully comes to fruition. You make your money with it. It's the ability to have an alternative, right? People barely have one plan, and within that one plan, they don't have alternatives, right? It goes to the target or the stop loss, and that's it. We have break even, which nobody cares about but us. And that's an alternative exit. And then we structure and engineer the exit if we have to. Right. So not only are we, exploiting space that we're comfortable within, it's because we understand what it's delivering. Like it's a potential average yield. Right. So by me just targeting that potential average yield, I earn my pay. I'm not trying to bust records or do something different. I'm just here repeating. It's I'm repeating. Today I happened to build a position 30 minutes earlier than expected. Right? This was 40 minutes, sorry, 40 minutes earlier than expected. Right? This is when I started to build that long position. Before here, I was just making 3 pips, 3 pips, 3 pips, 3 pips. Right? Here is when we started leaving trades behind. And now they're closing. Right? We plan for the next move, not the current move. Right? At the time, this right here, this current move was falling and falling and falling. Understanding what created the original move gives me the idea, the thesis that I should be buying this, right? Because I know the next move is probably back up, right? We play the next move. If this continues and makes a higher high, the next move is probably back down. And this is why I told you guys to become sellers up here, right? Not to the South Pole, but for a wick on the daily candle. Right? It's just run of the mill stuff. We just don't know how it's presented to us from day to day to day. Right? Here's a red candle. We're recycling a bunch of trades now. One, two. These ones here. Right? These ones over here. I'm putting them back. My break even is right there. About 4 pips away. 3.5 pips away. Beautiful. Right, red candles, a little bit deeper here would be awesome. Good place to buy, right around here. Right, so if we find our way up 875 anything above 875, 880, that zone here, this is all selling, right? It's for 3 pips. They're not swing traders. Crazy morning in this house, man. Boy, oh boy. Come on. Measuring cup just in case if it comes back here. Right. Let's recycle a few more. If we can get up to the top there, I want to set up for shorts. And so, by the time we have bankers close, selling is likely going to be in line with expectations. Just go around measuring average moves, right? Just take a peek, what is average? And then envision yourself doing one average move above the high, right? So that would be disrupting a lot of stops and all that stuff. Guys wanting to trigger long above the high would get triggered in, right? Guys putting their stop losses up there would get triggered, right? So, and the timing would be perfect, right? By the time we get up here, the European traders and bankers are going to the pub, and here in North America, we're left holding euros. What are we going to do with them? All right, so typically it kind of slows down at lunchtime New York, and that's when we would expect a pullback, and that pullback by definition is leaving a wick, something like this, on the daily candle, right? So we're kind of expecting the daily candle to push higher and then pull back, and that's what we're hoping to short into, right? You don't have to short. You absolutely don't. You can wait for the pullback to finish and buy back in. Right? I'm just preparing for the next move. That's all. Right? So if we're going up and up and up and up, it's not going to the moon. The next move will be an average leg down. We're just trying to figure out where that starts. Right? And typically, speaking in probabilities, it starts one average leg above the previous high. All right, so let's put one here. Right there. All right, so let's see what happens here. We can do that on a 5-minute chart. Are we going to go up the ladder or down the ladder and all that good stuff? All right, so here, if you have the funds, go ahead and recycle. All right, I'm going to put these trades back on. I'll do 2. And if we go a little deeper, I'll do 2 more. There we are. All right, keep buying red if you have the funds to do it with. Don't over click. Remember, if we go down another box, you have to put money in there too. right? And if we go down another box, we have to put money in there also. We are bullish. We're just trying to figure out where the down leg will start. Okay? We suspect it starts from a higher high. Okay, red candle, if you can buy, do so right around here. All right, I'll put one there. So that's 3, and I'm saving 1 for this. So 1, 2, 3, 4. The 4 trades that closed, I've put them back, and I'm saving 1 for here. All right, we're hoping to be done by lunchtime New York. After that, we expect the volatility to just kind of dwindle away, and that's when we get that wick at the top of the daily. Right now, an average 5-minute bar is 5 pips, and there's only 12 of them in our box, right? 12 5-minute bars, and the average is 5 pips. Whereas the same box has 60 1-minute bars, and the average 1-minute bar is 1.5, 1.6. There's more money here. So now we're just planning ahead, trying to see where that next break will come, right? Is it coming somewhere around here? The market going back up, and then break into this box, and then hopefully break into this box. And then we sell. Right, we're just measuring average moves, understanding what is average, and then we react to things that are less than or more than. Managing being wrong is the key to all of this. It's the size of your losses and the quality of your losses. Sounds silly, right? The quality of your loss. That's really what it is. You know, how good of a loser are you? I know I still get, brain freeze. Don't eat ice cream if you're going to be trading. So a little bit of a pullback here would be awesome. Just want to keep track of the clicks that you have. It sounds like we're holding ourselves back from making a mint, but in reality, it's because we don't know what the next bar holds. And so you have to have backup for the backup for the backup for the backup. And you don't know if on any day how many of those backups are you going to be required to, pull out. Start small and then grow a position, build into a winning trade. If you're that kind of trader that is looking for substantial swings, you can build into stuff like this using this method. All right? All you have to do is take one target and move it away or remove it altogether. Let the trade open, leave it open. and then start counting boxes instead of pips, right? So if your swing trade is up 3 boxes and you know an average move is 4 boxes, you might be faced with a pullback soon, right? Might be worth taking the trade off, right? So a swing trade in my world, I count it in boxes. And in this particular account, we have not done any swing trades. It's all been 3 pips, 3 pips, 3 pips. What are we at now? I still have 11 remaining. We've made it past 13. That's awesome. Here we are. Let's get some recycling done. Take the trash to the curb. All right. For some people, this turns into physical pain if the money at risk is too much. That's happened to me before. I threw up on my keyboard because I lost so much money. The risk is real, the pain is real. It's You are in control of that emotional toll, and it doesn't have to be a toll, right? If you manage the way you step into the market, you can also manage your way you're stepping out of the market, and that's where we make our money, right? We don't make money opening trades. Matter of fact, it costs money to open trades. You make your money when you're closing in profit. Otherwise, you're managing drawdown. And so, pick your poison. I want high probability of success, which leaves me with managing very, very few losers. And if I miss one loser, it has the ability of wiping out, a month of work or 20-year career for that matter. Right? So our job is to become, professional risk managers, professional losers. Lose professionally. And there's nothing wrong with taking trades off, right? So if you're feeling queasy, just take the risk off. Take it off. Even if you book a small loss or a small win, take it off. If you have fewer trades, less risk running, you'll breathe a lot better, you'll sleep better. Everything goes up, tenfold. Fewer trades or smaller trades. I'm only running 05s in a $13,000 account. I'm due for a raise now because the account has grown. I've earned the right to grow a little bit bigger. Right? So tomorrow I'll probably be trading 06. And then I'll stay at 06 until we're at 14 or 15,000. A couple more winners. Gold is on its way up. If you're into that shiny stuff. Dollar index, just for the sake of curiosity. This is the wind in our sails. All right, as soon as we've broken this low here, we have open seas for a little while. and we'll be posting this video once we have a chance to close more trades and maybe start a couple of shorts. Right. Remained steadfast. Perfect. Look at that. That's beautiful, man. When a plan just works. Right? Red candles put back the trades that closed. We're about to bust a high. Whoop, whoop, whoop. Love it. Stuff like this makes me forget all the troubles that I had before I started trading this morning. It's awesome. Love it. I need a red candle. Right, and any higher high. So if we break the high of the day, we're officially well beyond an average daily range, right? About 2 boxes. And so slowly but surely sell resistance, right? As we break a new high, we want to become sellers, not because we're looking for the South Pole, but only because we think we might be able to make 3 pips while the market just goes sideways into the Asian session. Right, so we're creating the wick at the top of the daily candle, and we're trying to do it in line with the European traders going home for the day. Right, so we have a goal and we have a timeline, and we have to kind of like have the two coincide. Right, there's a red candle. If you can afford to recycle. Again, this might be going back down, so don't put it all in the box, right? Just sparingly, pace yourself. There we are. Red candle, I'll take one if it goes slightly more, slightly lower. There we go, little bounce. All right, so how far are we from the low? We are officially 4 boxes. Right? If we break this, how much more can it go? Right? It's already 4 boxes in. We're not testing the high yet, and so we have to really go to the top of the box, don't we? If we can get to the top of the box, it's a higher high. Right? It's officially a higher high, and it's officially a sell for us. Right? And then we have the next 4 boxes to catch the wick on the daily candle. right, so somewhere up at sorry, I'm speaking. Somewhere here, I have to be looking for shorts. Right? Average moves are 3 to 4 boxes. If it goes beyond that, it's a trend. It's not a pullback, it's not a retracement, it's a trend. Right? It's more than the average pullback. And with that, we may have an opportunity to, you know, change direction. Yep. Yeah, 1.5, maybe 2 boxes. You know, you have to think of the average daily range and add maybe 18 pips to the average. That would be normal. You know, that if you think of the average as a sideways market, the only way to move the market forward is to do more than the average. Right? To move the market lower, you have to do less than the average. And so that's kind of the idea, right? We see how far off of the average, and then we play a mean reversion. And so this is the idea. If we get up into box 5 or 6 or even 7, we start to play mean reversion. Right? We're going back to the mean, not to the South Pole. Right? Gold is making higher highs. That's awesome. Freaking awesome. Come on, Euro. Bust a move. Dixie's breaking down. Gold is almost at its daily target. The euro's making a higher high. Come on. For those that don't know, that tick tick noise in the background is called tick strike. It's almost like the RPM for your engine in your car. It tells you when there's big volume coming through, and then if there's substantial volume coming through it, it's almost like it sounds like the engine, right? Tick 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 tick, and so you'll hear it. Instead of keeping my eyes on multiple charts, I can just listen for the dollar and trade the euro and all that stuff. There we are, closing more trades. If we can close this right there, we'll make that the picture shot for our video for today. Right, that will be for the recording. Come on. I could probably just close it manually. Or I'll wait. I'll wait so I could put on a couple of cells. I'm putting pending trades on my other platform while I'm sitting here watching this. Perfect. All right, we're just looking for a small move. What's this? About 5 pips? Yeah. We're looking for a half a box. Right? If we can get to the top here, we can start to sell. Right? And we just want to sell for 3 pips, and we keep selling in order to catch the wick. All right, it's a probabilities game, nothing more, nothing less. Right? If we happen to be wrong, that's perfectly fine. All right, so gold has fulfilled its average daily range. All right, I'm recycling here. 1, 2, and if we go to the bottom of the box, I'll put a couple more. Yeah, that's got to be a nice shot. All right, so remember the goal. We sell a higher high, and it's temporary, right? Really, really short-term stuff. If you can be flat and walk away, come back tomorrow instead, that's probably even better, right? Come back tomorrow at this time, and we'll do it all over again. I'm going short because I'm busy all day and I'm here all day. Right? But the goal is to, have your plan, and the plan must include the next move, right? Not the current move. The current move is coming to an end. We already know that. We're already planning to trade the next move. Right? Keep your mind looking forward. All right, here we are. I'm closing all of this. And that'll be just in time for me to go do my pills and stuff that I have to do. All right, perfect. This concludes our trading session, ladies and gentlemen. We will make that a picture, and I'll be uploading the video shortly. Those of you that are continuing to trade, you know the plan. All right. Thanks all of you for being here, and I'll see you guys tomorrow. Same time, same link, same everything, and I'm off to the pharmacy. Bye-bye.